Hello, everyone. I'm Airav, and you are tuned in to the 675th episode of our Here and Now podcast. Today, we bring you the latest buzz from the insurance industry. So, let's dive right in. Our first story today comes from Money Control. The Indian government is considering the creation of a national natural disaster risk insurance pool to manage losses from extreme events such as floods, earthquakes, and cyclones. Senior officials from the Home and Finance Ministries met on February 27, 2026 to review disaster risk financing frameworks. Currently, India lacks a unified catastrophe insurance pool, leaving much of the damage from natural disasters uninsured and dependent on government relief. The proposed pool would act as a risk sharing mechanism, spreading financial exposure across insurers and stakeholders. Officials highlighted that rising climate related and geological risks are imposing significant economic costs. The pool is expected to strengthen resilience, reduce fiscal burden, and provide households and businesses more predictable protection. Discussions remain at an early stage, but the initiative signals a move towards structured disaster risk financing in line with global best practices. Moving on to our next story from CNBC TV 18. Indian companies are reworking employee benefit structures as healthcare costs continue to climb, according to Mercer Marsh Benefits India's Future of Benefits 2026 study. The report draws on insights from hundreds of employers and tens of thousands of employees across more than a dozen industries. It projects India's medical inflation rate for the year 2026 to be close to 10%, reflecting sustained cost pressures. In response, many employers have increased the coverage under health insurance plans, with sums insured now ranging from modest levels to well above 10 lakh rupees. To manage costs, organizations are using measures such as co-payments, restrictions on hospital room rents, and limits on dependent coverage. Parental insurance is shifting toward shared funding, with co-sponsorship becoming far more common than it was 3 years ago. Outpatient benefits are expanding, covering dental, vision, diagnostics, teleconsultations, and pharmacy expenses. Flexible benefit programs have grown steadily, with employees willing to spend from their own pockets to enhance coverage. Technology adoption is rising, though challenges in managing benefits data remain. Overall, companies are moving toward shared funding models, preventive care frameworks, and flexible structures to balance rising costs with employee expectations. Moving on to our next story from the Dainik Jagran. The Delhi government is preparing to extend health insurance coverage to nearly 2 lakh registered construction workers. A proposal will soon be placed before the cabinet for approval. Under the plan, workers will be entitled to cashless medical coverage of up to 10 lakh rupees. Of this amount, 5 lakh rupees will be provided by the Delhi government, while the remaining 5 lakh rupees will come through the Pradhan Mantri Jan Arogya Yojana, also known as Ayushman Bharat, the central government's flagship health insurance scheme. Ayushman Bharat offers 5 lakh rupees per family per year for hospitalization, aimed at supporting economically weaker households. By linking construction workers to this scheme, Delhi intends to extend the benefit to a total of 10 lakh rupees. The initiative is designed to ease medical expenses and provide financial security for workers and their families. Once approved, it will mark a significant step in expanding social welfare coverage for the city's labor force. Our final story today comes from the print. The Ministry of Cooperation, after launching Bharat Taxi as India's first cooperative-led ride-hailing platform, is now turning its attention to the insurance sector. Instead of setting up a new cooperative entity, the ministry plans to build on the existing structure of IFFCO Tokyo General Insurance, which is a joint venture between the Indian Farmers Fertilizer Cooperative, holding 51%, and Japan's Tokyo Marine Group, holding 49%. Discussions have begun with IFFCO to expand insurance services to cooperatives, with district central cooperative banks, state cooperative banks, and urban cooperative banks expected to register as corporate agents under the guidelines of the Insurance Regulatory and Development Authority of India. India currently has 34 state cooperative banks, 351 district central cooperative banks, and 1,469 urban cooperative banks, each eligible to sell products of up to 9 insurers. While the ministry prefers IFCO Tokyo, customer choice will remain open. The proposal, still in its early stages, aligns with the National Cooperation Policy 2025, which seeks to modernize cooperatives across insurance, healthcare, tourism, and transport. Notably, IFFCO Tokyo already provides accident and health insurance coverage for pirate taxi drivers. And with that, we conclude today's episode. We hope you have found these in depth updates helpful and insightful. As always, our podcast, Here and Now, will continue to bring you more such stories from the world of insurance. Until then, take care, goodbye, and have a great week ahead.